Welcome to Module 4, the contract to close process. Here we've got 2 lessons, the first 14 days, what to expect, and then we've got actually that last couple of weeks, the actual closing process of what you can expect to get to the finish line. So let's get started. Welcome to Lesson 1, the first 14 days. You've signed that contract with the seller. Now it's go time. You've got things flying into your email. Everyone's needing something from you. There's the title company. If you're in a state that uses attorneys for closings, there's attorneys. There's your realtor. There's inspection companies. There's homeowners insurance that you need to shop for. All these things are happening in the first couple of weeks. So we're just going to take a breath and we're going to break that down for you. So make sure you've got those notes going. You're going to definitely want to take notes on this section. So the first few days, I already urged you in Module 3, make sure you're narrowing down and choosing that lender. You're also going to be asked to go to the title company or the attorney. You're going to be asked to either wire or cashier's check that earnest money deposit, which is your deposit on the house, to make sure the seller doesn't sell it to somebody else. Not to worry, that money that you put as a deposit is credited to your final costs at closing. So this is all within the first few days. You've also conferred with the lender. You've hopefully locked in your loan to make sure that the rates don't fluctuate. Get with your realtor to make sure that they can give you some names of inspectors to inspect the property. You also need to start shopping for homeowners insurance. This is a really important part. It's important that you do this early because it might take you as much as a week to finalize this. Important changes in the homeowners insurance policy could affect your payment that you're expecting. If your lender or you were expecting a certain amount allocated monthly for insurance, but you shop around and find out that insurance is higher than you expected, your payment is going to be higher. If you shop around and it's lower than you expected, yay, I hope that it is, your payment's actually going to be lower. So it's imperative not to wait for this important part in the process and that you shop for your insurance super early in that first week. Now, how do I know where to go for insurance? Definitely call who you have your car insurance with. Definitely, or if you have renter's insurance or if you own a home now, call definitely the people that you might already be engaged with. But it's actually really important to check with other entities, other companies, because I know this is going to be hard to believe, but at least in Houston where I live, you could literally live on the other side of the freeway and have different insurance than the other side. That's because claims might be higher on one side of the city than the other. It's true. Weather happens all over the country now, especially in the South where I live, but you could live in a place where it freezes a lot, or snow, or flooding, or earthquakes, or fires. So you never know where those lines are for insurance companies. It's like a silent line where they're like, oh, we don't want to insure over there. So in this part of the process, it's really important that you get started early because it could affect your payment. That's really the bottom line. In addition, in the first 2 weeks, you can expect the lender is going to be sending you documents to DocuSign, or if you're not able to DocuSign, you'll need to present yourself in person to sign them individually live with ink. We call that wet signing. So you're going to be signing disclosures, likely your lock agreement. You're going to be asked to refresh documents at this part of the process. Also, in the first 14 days of the process, after you have inspections, the appraisal is going to be ordered by the lender. It's important to note at this part of the process, no one in the interest of the outcome of the transaction is able to order the appraisal. That means realtor, buyer, seller, even loan officer. I mentioned a term in an earlier module, arm's length. It has to be an independent process, not ordered or not influenced by anyone that's got something to gain from the outcome of the transaction. So the lender, the mortgage company, is going to order that. For example, I'm not able to order an appraisal or choose the appraiser that is going to perform the task. It's someone that's on staff with our company that we don't even talk very often, and she's over there. We have a random list of appraisals, and that's how the appraisal is chosen. So you will pay that fee to the lender before this is ordered. It's important to know that's the only thing that you're going to be required to pay up front, in addition to that earnest money that we talked for before. If a lender is asking you for any money outside of the appraisal, then you need to definitely get a second opinion. This could be a sign of something funny going on that might definitely need further investigation or further explanation. This brings me to an important part of this part of the process about, is it too late to get a second opinion? So we're going to end lesson 1 with this. If you sense in the first week or so of the transaction that the lender is not responding, not working quick enough, not answering your questions, not being efficient or being disorganized or asking repetitive questions, it's a very good idea for you to get a second opinion. I want you to know that as the consumer, you can change mortgage companies at any time. You are the consumer, and you have the most rights of anyone that's in this whole transaction, as long as you're complying with the contract. Now, at this point, it's important to note that if you do get a second opinion and you decide to hop over to another lender for your business, number 1, you won't be refunded any money that you might have prepaid for the appraisal. Number 2, you need to make sure before you hop over to the other person that they're aware of what the timeline is and that they're able to meet the timeline that you need. So it's a good idea to work with your realtor, because they're used to guiding people through this part of the process to make sure as you're making changes that you're doing it, not putting anything in jeopardy. So this concludes lesson 1, the first 14 days. I'll see you in lesson 2.